Thank you for watching this video. We would like to thank our 2024 gold level sponsors, Geronimo Properties, May Property Management, Northmark, Boston Planning and Development Agency, and Cabot & Company. We would also like to recognize our 2024 charitable partner, Ironstone Farm. The views expressed on this program are solely those of the participants and do not reflect the views of the CCIM Institute, the New England CCIM Chapter, or any other organizations. Greetings and welcome to episode 4 of the New England CCIM Chapter Podcast. I'm Michael Chase, former chapter president from 2022, current board member and treasurer. I'm also a commercial mortgage banker with Northmark. As always, I'm joined by my co-host, Matt Mayrand.
Thanks, Mike. Appreciate it. I'm Matt Mayrand from Glickman, Cavago & Jacobs and the owner of May Property Management.
Before we get started, we always like to start off with a few reminders. Chapter is hosting a 102 course from May 13th to May 16th. The 102 course covers market analysis for commercial real estate. Just as a reminder, you do not need to have taken 101 before this course. There are no prerequisites, so it can be a great way to kick off your path to a CCIM designation. The chapter is also hosting a Pickleball Open on Thursday evening, May 23rd at Pickle Boston from 5:30 to 8 p.m. And also keep an eye out for information on our annual summer social. Once again, we will be hosting it at the Intercontinental Hotel in Boston on the evening of June 23rd. These are just a few of the programs and educational opportunities that the chapter is planning, so please check out the New England CCIM Chapter's website. Follow the chapter on LinkedIn to keep up to date on all events. Without further ado, let's jump into today's topic. Matt, we're going to be talking about market cycles. We had the GFC kind of from 08 to 2010, and then there was about a 10-year expansion where anybody who entered the industry over those 10 years didn't see a downturn for one of the longest periods in our industry's history. And then you get COVID, and then immediately followed after that, you get this inflation shock. But as we were talking about, there are opportunities in any market cycle. So what are some of the opportunities that you're seeing, and what are some advice that you're giving to people in the industry about those opportunities they could be looking to take advantage of?
Yeah, Mike, you're right. We've seen a lot of kind of up and downs lately. I'm old enough to recall a couple other ones even before the ones that you mentioned. So I got into the real estate business after the dot-com crash, right? So I was part of the tech sector, working at a number of startups through that whole dot-com time, and was definitely kind of front and center with a private equity-backed company that lost its funding. Two companies back to back, I might add, that lost their funding, and then poof, the company disappeared. So these happen in every industry, and they happen. It's a real estate cyclical, right? So it's going to go up, it's going to go down. There's always opportunities, and I think it's important. Especially we have a number of younger folks now that I'm an old fogey. Anybody under 30s, young, they're all kind of nervous for a good reason, right? They've never been through a cycle like this. They're uncertain what's the other side will look like. You and I have probably been through quite a few and kind of learned a little bit from them. But, the number one thing is that things come back, right? I've never seen any kind of market cycle that stayed perpetually bad, right? I mean, maybe things change, maybe things get a little different. Next time around, it's never going to be exactly the same, but things always come back, right? So, don't feel like, even in 08, right? Even in 08 and 09, where literally the sky was falling, it did come back, and that will come back again. Do you have any experience with kind of stuff?
Sure, absolutely. Like yourself, I entered the industry back in the early 2000s. We had the dot-com bubble, certainly went through and experienced the GFC, again from 08 to 2010. And then after that, we recovered. Like you said, markets are cyclical. And I think the smart participants and smart companies realize that, so they don't go and do wholesale layoffs. And people don't necessarily go and exit the industry because they know things will come back, and they want to be there and be ready for when that rebound happens. What I always advise young people coming into the industry is, during good times, you have to save. You have to put things away. You have to build up that cushion, that reserve. Just like we advise our clients in their real estate and underwriting, put away some reserve so that you're there during the times, because good times aren't going to last forever, just as bad times won't last forever. And you want to have that staying power when other people don't and they have to leave the industry. You can hang in there and, again, be ready for your clients when things come back.
Yeah, it reminds me. So back, I guess it was probably about 13 years ago, maybe about 12 years ago, is when I finally earned my PIN for CCIM. And, that was no coincidence timing wise. During those few years, I did a couple of things. One, I created May Property Management because I had an opportunity to do some management while my brokerage revenue was tanking. It was having and having, every year. So it was tough.
Yep.
Those first couple of years. In fact, my wife and I, we got married in '08, and we were just watching. We were overseas watching, CNBC Worldwide or one of these channels, BBC
Oh,
Worldwide,
yeah.
and
Yep.
just watching everything, implode basically
Mm.
on TV in a foreign country. So, that's kind of funny, but it gave me a great opportunity to take some time, create May Property Management,
Yep.
and go back and sharpen my tools, right? So focused on CCIM. I was committed to investment in real estate and understanding, real estate and the fundamentals behind it. And that CCIM was something that was very important to me. So I did that.
That's great. Yeah,
And
that's a great point. When you're in a peak market cycle, it can sometimes feel as if you're, drinking from the fire hose and everything is coming at you all at once, and you don't have the time to kind of always reassess or take advantage of those other opportunities. There are silver linings, and you can do things such as take advantage of some time to get further educated. You can take advantage of the time to sharpen your tools, as you said, build other relationships that you might not have otherwise had the opportunity to start fostering, making sure that, as someone who's a little bit more senior, you have the time now to mentor your younger people. Commercial real estate's a broad market. There's so many segmentations to commercial real estate. So being able to pivot. If office is soft today, do I have the ability to look at a different asset class? Do I want to look at retail? Or maybe now's the time to enter office, right?
right.
As they say, buy low, sell high. And this might be the opportunity to enter into a segment that's struggling, so long as you have that dry powder and capital available to you.
Yeah, I think those are all really, really great and constructive points that you made there because yeah, I mean pivoting, especially for us. So I work at a Central Mass, so it's a small market for sure compared to Boston. And because we're primarily Central Mass, we have to pivot often because there's just not a lot of product of various types, and we're seeing a lot of people now, that were really focused on office, including myself, pivoting into industrial, or some are looking at multifamily, which have their own challenges because they're both kind of long in the tooth. But I think to your point, if I was a new broker, I would definitely want to jump into a segment that was a little bit down and ride it up, as opposed to trying to get in at the peak. And when I started doing commercial brokerage, the company that I worked with did a lot of industrial at the time. And I was trying to get into these industrial deals. I was running around with buyers, and I was just getting smoked because I didn't have the relationships with the owners or even the best buyers. And so I'm trying to run around and get these buyers into buildings, and they're just all getting beat out. That was something learned where, yeah, maybe it would have been better for me to focus on a different product type at that point in time. And I've seen people do it, whether it be retail or multifamily, and now they just went through this phenomenal rip, and they're very well established, and they got in probably about 12 years, 13 years ago.
Absolutely. Speaking about silver linings and opportunities in any market cycle, if you look back to that period in the GFC, during, '08 to '10, there weren't a lot of transaction volumes happening. But if you move forward 5 years after that, 7 years after that, people were probably saying this as, man, I wish I had bought everything that I could have during
Yeah,
that. So now we're in another one of those periods where 5, 7 years from now, people are going to look back and go, oh man, I wish I had just deployed all the capital that I could have. Let's talk a little bit about that, because of course the buzzword of the day is distressed. So
right.
how can people take advantage one way or another, find those distressed opportunities, execute on those distressed opportunities?
Yeah, I think much like any other, identifying any other kind of opportunity to a project, you just have to, dig in, right? I mean, you're not going to find a distressed asset that's, listed prominently to everybody. You're going to have to really dig into these and find out individual, situations for these sellers. And we're maybe not quite there yet, but if interest rates stay up, people are going to get distressed. I was watching another podcast, and I think the average fixed term is like 18 months with commercial financing. Remaining, within 18 months, a whole slew of these owners are going to have to go through the refinance process, and ultimately, some are not going to be able to do it. So there absolutely is opportunity out there, and maybe it's not sitting in front of us now, but boy, that's going to come by pretty quick, right?
I would say there is both opportunity, but also I'd put out a word of caution. On the opportunity side, as we've gone throughout this year already, we're already, into the second quarter, and we're looking forward. When will the Fed make its first rate cut? When we started the year, oh, it's going to happen in March. And then
Right.
no, well, maybe June. And now can it happen by September, right before the election? Maybe, maybe not. So is it even going to happen at all this year? As this higher interest rate environment seems to keep pushing out and prolonging itself higher and higher, there are going to be, like you said, opportunities of potentially sellers who are going to run out of time. They can't wait out the Fed. There's going to be those opportunities for buyers to potentially take advantage of getting a property at a discount from a seller who their maturity just came up, or their investors needed funds, or they had to distribute capital. There will be those opportunities. However, on the word of caution side, just not going to be a tidal wave of this stuff. There's going to be select opportunities out there, because when
Right.
you have something that's broad-based, you have a lot of participants. You have regulatory participants, you've got lenders, you've got court systems. They don't want to flood the whole market. They're going to be also, pick and choose what properties they might let go of, or sponsors that they might start to release. What we see this year, I mean, the volume of maturing loans, has ballooned for this upcoming year. And much of that are the result of loans that had originally matured 2 years ago and last year being pushed forward, right?
Interesting.
And
Yeah.
one of the sayings that I heard recently on another panel, someone quipped, "A rolling loan gathers no loss." So
That's great. I like that.
so if regulators are being friendly to the banks and
Yeah.
saying, hey, we understand what's going on, we're not looking again to flood the market with a bunch of foreclosures and defaults and clog up the court systems, then yes, there is going to be a bit of kicking the can down the road. There will be those select opportunities, a sponsor that a bank is saying, yes, we just don't know that this property or this sponsor is going to necessarily be able to see it through to the end. So we will be willing to let this go. And this is, again, going back to your original point. If you have the time now to build those relationships, get in with people who have those relationships, you might be able to pick off and identify some of those opportunities.
No, I think that's a really, really good point. And I think, fundamentally things have changed as far as the way that banks handle distressed assets. A cycle or two ago, I did do the rounds with all the kind of local banks, anticipating a lot of distressed assets, REO type property, that sort of thing. It never evolved. And I think something has fundamentally changed in that process, like the savings and loan crisis. Back then, it was all performing, non-performing, which meant basically they were paying their mortgages and they were still getting foreclosed upon. I see the exact opposite happening now. They will be non-performing, non-foreclosed assets out there. But what I did have a little bit of success with last go around when I did this is not necessarily selling buildings, but I sold some notes. So the banks are, if they're holding some notes on these distressed assets, or for them, if they thought it might be a little bit messy and just didn't want to deal with the whole foreclosure process, you can buy these notes. You can buy them from the banks directly, sometimes at par, sometimes a little bit above par or a little bit below par. And we did that a few different times. And the folks that I worked with to buy those notes did really well. But they were experienced in the foreclosure process and had a team in place to do that. You just have to kind of keep your mind open to different opportunities and see kind of how this is going to go down this time around. And I expect more notes will be sold than assets will be foreclosed upon. But even more likely than that is kick the can down the road. It worked last time. There's no reason to believe it won't work this time. And then a select notes will probably be sold, by the banks, kind of to folks that buy that. And my guess is that will be primarily what happens in certain market segments like office.
Yeah, absolutely agree. Yeah, that kind of order of operations as to what are the bank's options. You're right. That is certainly a much lower lift for them to go and sell that note. So we talked a little bit about distress. We talked about the opportunities for practitioners taking the time to improve their and foster relationships. What other segments or areas, whether on the tenant side, management side, what other things are they doing to transact right now?
As we were talking about, a couple of things popped into my mind, and obviously it's going to be different for a manager or primarily a brokerage or family office or whatever. All of these are different types of businesses that would have different strategies, but the pivot is critical. Pivot on product type, pivot on maybe even market location. If you're really localized, maybe you want to expand a bit. Of course, you want to pivot to what does your overall business look like? What are your focused areas? Can you train in a slightly different area to become an expert, more well-rounded expert in your field?
I like what you just said, being a more well-rounded expert. And because we're all practitioners and we're all focused in a certain segment, but what you ultimately want to become, it's a relationship business. You don't want to be just viewed as the provider of one service or product. You want to be viewed as a trusted advisor.
That's exactly right. Find a lender, find a engineer, find somebody that you work with and you enjoy spending time with, and invite them to CCIM pickleball. Right? People love talking about themselves. That is a fact. So ask people about their lives. Find out how they learned what they learned, and those relationships in real estate and commercial real estate. I'd say that's number one. 100% is the relationships. Everything else is secondary to that. So if you want to lean into anything, lean into relationships and build those relationships and build, your knowledge and education. And if you do that, no matter what the market does, you'll be fine.
I think that's a great point to close on. It is a relationship business. It's a relationship industry. And the things that you can do when you have the time to continue to foster and build those, it's time well spent. It's planting seeds that are going to grow and you're going to be able to harvest later on. I want to thank you again for tuning in and watching our podcast here. Please feel free to follow us on LinkedIn and other social media platforms. If you liked what you saw today, please like and subscribe below. Hit that notification button so you'll be alerted whenever we post a new podcast. Thank you again for joining us.
Thanks, Mike.